In making money, you must ensure you have all the necessary resources. In these dire times, there was never a greater need for help choosing the right stocks that pay great dividends. In this three-part video, I'll give you a list of stocks to invest in for October, November, and December. Granted, all these stocks pay a generous amount of dividends. However, the market can be highly volatile sometimes, and there is no perfect way to predict demand. Please ensure you do your homework before watching this video to confirm that these businesses are still paying monthly dividends. Additionally, I won't go into great detail about each business. Just because a stock appears on this list doesn't mean I support it or I advise buying it. Before investing in any stock, do your homework and diversify your holdings. Therefore, with that said, let's begin with the introduction. Hello and welcome to Investor Facts, where we address all your investment needs and questions. Stick around till the end of the video to learn more about investing and be one step closer to the financial freedom you've always wanted. Agree Realty, company ticker ADC, is a publicly traded real estate investment trust. Its principal activities focus on buying and developing properties for net lease top-tier retail tenants. The company owned and managed a portfolio of 1,027 properties spread across 45 states, with a total gross leasable area of about 21 million square feet as of September 30, 2020. As you can see, the property owners of several well-known companies such as Walmart, Tractor Supply, and Dollar General. In January last year, Agree Realty changed from paying quarterly to monthly dividends. Since this video production, they have increased their dividend and now have a dividend yield of 4.04%. The amount of their most recent dividend per share was about 23.4%. Next up, AGNC Investment Corporation, ticker AGNC. AGNC conducts business as a mortgage real estate investment trust in the United States. The company invests in residential mortgage pass-through securities and collateralized mortgage obligations, for which a U.S. government agency or U.S.-sponsored enterprise guarantees the principal and interest payments. $68.6 billion worth of investments is currently held by AGNC. The 30-year and 15-year fixed-rate backed securities make up most of their agency portfolio. Although a small portion of their overall portfolio, they invest in non-agency MBSs. At that time, this video was being produced, AGNC had a dividend yield of 11.94% and paid a dividend of 12 cents per share. You can see that their stock has a long history of reducing dividend payments. Apple Hospitality REIT is a brand new stock to this list. With the ticker symbol APLE, the pandemic caused the company to stop paying dividends in April 2020. The company didn't start paying dividends again until March 2021 due to how badly the hotel industry was affected. But in March 2022, they only recently began paying dividends monthly. The company is paying shareholders 5 cents per share, which is less than half of what it did before the pandemic. One of the most extensive and varied portfolios of upscale room-focused hotels in the United States is owned by the real estate investment trust Apple Hospitality REIT. The portfolio of Apple Hospitality includes 235 hotels in 87 markets across 34 states, totaling more than 30,000 guest rooms. The company's portfolio, which is dominated by brands that are leaders in their respective industries, include 104 Marriott-branded hotels, 128 Hilton-branded hotels, 3 Hyatt-branded hotels, and 2 independent hotels. The ticker for the REIT Armour Residential is ARR. The company's portfolio comprises securities issued or guaranteed by government-sponsored entities or GSEs in the United States and Government National Mortgage Administration backed by fixed-rate, hybrid adjustable rate, and adjustable rate mortgages. It's encouraging to see from their website that almost all of Armour's investments are in agency securities, but despite this, The company has endured years of monetary problems, reporting sizable revenue losses over the past few years, although it has a ridiculous dividend yield of 15.75% over the past 10 years. They have a long history of cutting it. Hopefully, better times are on the horizon for this business. Banco Bradesco, BBD, is a diverse Brazilian bank that offers a range of financial goods and services to people, organizations, and companies, domestically and abroad. Savings accounts, mutual funds, and variety of loans and advances such as overdrafts, credit cards, and loans, with repayments and installments, are all offered by Banco. They are of Latin America's most prominent financial organization, with more than 1.7 billion assets and 71.2 million customers worldwide. They were established in 1943, and since then, they have expanded tremendously in terms of its services. Their stock is listed in New York Stock Exchange and has a dividend yield of 4.19%. Their most recent dividend payments to shareholders was for 0.037 cents, but they have made some sizable special dividend payments in the past. The ticker symbol for Broadmark Realty Capital is BRMK. It provides a short-term first seed of trust loans backed by real estate to help finance the purchase, development, or renovations of residential or commercial properties around the country. The company has been trading on the New York Stock Exchange since 2019 and is set up with a mortgage rate. According to their most recent investor presentation, Broadmark has made over $3.8 billion in investments since its founding in 2010 and presently manages a $1.6 billion loan portfolio. Each loan includes senior secured, a type of loan considered safer than unsecured loans. Additionally, they have yearly increased their lending portfolio since 2014. Their stock now has a dividend yield of 11.34% and distributes a 7-cent monthly dividend per share. Cross Timbers Royalty Trust, CRT, operates as an explicit trust. In Texas, Oklahoma, and New Mexico, it holds 90% net profit interest in properties with producing, non-producing, and overriding royalties and 75% net profit working interest in 4 Texas holdings and 3 Oklahoma properties. Cross Timber Royalty Trust was established in 1991. This business is among many of the list set up as royalty trusts. Remember that the oil market's performance significantly impacts the number of dividends a royalty trust pays stockholders. As you can see, the number of dividends you receive each month can vary greatly. So, if you're looking for a stock with some more reliable monthly income, keep that in mind. Listed under the symbol DRETF, Dream Office Real Estate Investment Trust is a Canadian REIT transacting in American over-the-counter markets in Canada, including Toronto, Calgary, and Ottawa. They manage and own portfolio of upscale office buildings. Their occupancy rate is listed as 85% on the website, which isn't excellent. However, they can access many Canadian government offices and they have few attractive high-end houses in the real estate portfolio. The office REIT industry hasn't been doing so well lately, as you might expect, both in Canada and United States, due to the pandemic and individuals working remotely. Another thing to remember is that this stock is relatively light traded, so if you're interested, be cautious about purchasing excessive shares. They also offer a monthly variable dividend. However, the stock now has yield of 4.26%. The ticker symbol for the Dream Industrial Real Estate Investment Trust, another Canadian REIT that transacts on American over-the-counter exchanges, is DREUF. The Canadian business Dream also owns this one. Dream Industrial is a company that owns and manages a diverse portfolio of premium industrial properties in Canada, the United States, and Europe. It is a considerably larger REIT than Dream Office and, as of right now, 244 of its assets have a combined investment property more than $6 billion. Impressively, they have a committed occupancy rate of 98.7%. Similar to Dream Office, this company is also thinly traded. So keep that in mind. At the moment, it offers a dividend yield of about 4.95%. Dynex Capital has a ticker symbol DX. The real estate investment trust can make leverage investment in mortgage-backed securities in the U.S. Residential MBSs, commercial MBSs, and interest-only CMB securities make up Dynex agency and non-agency MBSs investments portfolio. Established in 1987, they are one of the first mortgage REITs. Approximately 7.3% of their mortgage portfolio comprises agency commercial mortgage-backed securities, making up 98.2% of their total mortgage portfolio. Unfortunately, their book value has been declining for many years, which has led to a history of reducing their monthly dividend payments. Their stock pays a monthly dividend of 13 cents per share, which now yields 9.64%. Under the ticker EFC, Ellington Financial purchases and manages corporate and the other U.S. financial assets related to consumer mortgages. In addition to offering collateralized loan obligations, the company creates and administers residential mortgage-backed securities or RMBs. Along with many other services, they also provide corporate debt, equity securities, derivatives related to mortgages, and those unrelated to mortgages. With a focus on high-yielding short-term loans, Ellington Financial manages more than $13.4 billion in assets in 2017. Their capital allocation is generally split between 8% agency RMBs and 88% credit. Their stock now pays about 15% per month in dividends to investors, yielding 11.48%. Ellington Residential Mortgage Rate, ticker symbol EARN, is another new addition to this list of businesses. This stock changed its dividend payment schedule in October last year from quarterly to monthly. They focus on acquiring, investing in, and managing assets tied to real estate and residential mortgages. In addition to agency pools, agency collateralized mortgage obligations, CMOs, and non-agency RMBs that make up non-agency CMOs, it receives and administers mortgage-backed securities or RMBs. Ellington Residential Mortgage Rate is owned by the same business that owns Ellington Financial, as you could probably figure out by adding 2 and 2. Given that they are both mortgage REITs, there aren't many differences between the two businesses. But ERN presently offers 11.74% dividend yield and pays monthly dividend of 8 cents, which were just decreased by 2 cents from the last month's dividend. And there we go. That is it for part 1 of the videos. Again, these are merely my thoughts and opinion on the stock. It is still best for the investor to do their research. See you in the next part. Once again, this is Investor Facts, ensuring that all your questions are answered. If you enjoy watching the video, kindly leave a like and subscribe. Until next time, cheers!